Hey, Terea here from Bay Equity. As we talk about where rates are headed in the real estate market, it's important to keep in mind that the low rates of the last few years were an anomaly. When we look at historical rates, even rates in the sixes are still considered historical lows. Historically, homeownership also outperforms inflation. This means that if there is an asset to invest in, housing is one of the few tangible assets that tend to hold its value. According to many experts, real estate has consistently been voted the safest investment. The '08 crash certainly has homeowners and buyers worried about potential recessions, and for good reason, but historical context is everything. 4 out of the last 6 recessions have seen home prices continue to appreciate. So even if we do head into recession, that does not necessarily mean that home prices are going to decline. With the speed and degree in which home values have risen over the last several years, there's also plenty of room for a slight decrease in value that should be something the market sees. Another important factor to note is that if we do head into a recession, interest rates usually go up at the beginning of an economic decline, and then in an effort to stimulate the economy, they will typically fall. The days of rates below 3% may be behind us, but we do not expect to stay up where we are at right now. Currently, we are seeing the market slow down, but it is just headed back to the marketplace where we were at pre-pandemic, which were great years for real estate. The trajectory we were on was unsustainable, and this slowing is a welcome relief. Home values are still expected to continue to rise, just at a healthier pace than we have been seeing since the pandemic. This means that if you continue to sit on the fence, that same home is going to cost more the longer you wait. The big question is rates. Where are they headed? Right now, we are waiting for the Fed to announce what rate hike we will see in July. A 3/4 point rate hike has already been priced into the market, but comments last week have made some believe that we might actually see a full point rate hike instead. We saw a slight jump in rates after those rumors started swirling. Should the Fed announce a full rate hike in the July meeting, we certainly could see rates rise further in the near term. As we're looking through the rest of the year, generally the expectation is that rates will continue to rise, although not as quickly as we have seen over the last several months. Fears of inflation continue to drive rates up, while fears of recession can bring rates back down. As of today, inflation is winning that battle, with rates continuing to rise. The most common question we are getting right now is, should I buy a home now? The short answer is yes. It's still a great time to buy. A couple of months ago, if you wanted to win the offer, we were having to go hundreds of thousands above asking, even $1 million or more, while waiving every contingency known to man. With the slowing that we are seeing, buyers are able to get more reasonable offers accepted. This is a time when the old saying, date the rate, marry the house, couldn't be more true. Are rates higher than we are used to? Yes. Are they still historically low? Also yes. Do we expect rates to come back down as fears of recession outweigh fears of inflation, potentially sometime in 2023? Yes. When the right home comes along that is within your current budget or your borrowers, based on today's rates, do not hesitate. Buy the house now, and as soon as rates look to be in their lowest, we will refinance at that time. The trick with this is you don't want to refinance too fast. We have to wait at least 6 months in between each refinance. So if you get them as they're coming down, you might be stuck with a higher rate than necessary, whereas our goal is going to be to wait until we think that they're at the absolute bottom. We'll lock you in at that point and refinance. So if you or your borrowers are hesitant, now is absolutely the time to buy. We're gonna fix that rate as soon as we possibly can. Hopefully we'll see that in 2023. If I could accurately predict rates, I would be retired on my private island right now. So we don't know for sure, but that's the best guess. All experts are saying that we do anticipate long-term, thinking 12, 18, 24 months down the road, that rates will come back down. Short-term, at least through the end of this year, we are expecting them to continue to rise. If you have any questions at all about any of the topics that we talked about, please don't hesitate to reach out. I'm always happy to be available to answer questions for you. You can always call, text, email, whatever works best for you. Thanks so much.